Hello and welcome. This is June Collier from Make Your Money Work For You. Congratulations on making it to week 4, technical analysis. In this session, you will learn how to read charts and patterns. Technical analysis reads the emotions of the stock market. Now, the goal of this training is to teach you how to read basic stock indicators and stock patterns. Now, what is technical analysis? Technical analysis is very different from fundamental analysis. With technical analysis, you are studying the behaviors of the stock's movement. You are looking for patterns and indicators that predict where the stock is going. Stock traders use technical analysis because it gives short-term signals, and a trader is looking to only hold a stock for a short period of time to enter, make profit, and exit. An investor holds the stock for a longer period of time, which is why investors tend to lean more towards fundamental analysis instead of technical analysis. It's all about the trend. The most basic technical analysis is trend. The trend gives you a big picture of the direction of the stock. It is a pattern that you notice. Trends can be identified over different time periods. Long time periods can give you a true overall direction of the stock, while shorter trend periods often show the day-to-day emotions of the market. There are 3 basic trends. Uptrends signal the price action of a stock that moves higher in price over time. Downtrend signals the price action of a stock that moves lower in price over time. And then there's Sideway Trend, which signals the price action moving sideways in price over time. Now, never go against the trend. The trend signals where the market is headed. Volume is another technical indicator that provides data concerning the amount of stock that changes hands over a period of time, usually a day. There are 3 things that volume can give you. Liquidity. You want to make sure there's enough interest in the stock that you're not stuck trying to sell a stock that does not have enough interested buyers. Significance. When a stock has higher than normal volume, this can be a signal that there is something going on with the company that has buyers gobbling up shares or sellers dumping shares. Confirmation. High volume can show and confirm how high buyers are willing to buy stock or how low sellers are willing to sell a stock. This can confirm the support and resistance level of a stock. Standard price bar. There are a few indicators that can show you the price action of a stock. The standard price bar is a simple indication that can provide you with the open, the close, the high, and the low of a stock price for a particular time period. The line extending to the left is the indicator of the price the stock opened at. The line extending to the right is the indicator of the price the stock closed at. The top of the line is the indicator of how high the price of the stock went, and the bottom of the line is the indicator of how low the price of the stock went. Candlestick Basics. Candlesticks are very similar to your standard price bars. They provide the open, close, high, and low of the stock price, but they do so in a visual way that tells a story in a very quick and easy way to see. You can interpret price information very quickly with just a few candlestick bars. The color of the candlestick tells you if the stock closed higher or lower as compared to the opening. Black means it closed lower. White means it closed higher. The solid part of the candlestick is known as the body, and it represents the opening and closing prices for the time period. The length of the body tells you the strength sentiment of either the buyers or sellers. The 2 thinner lines are known as wicks or shadows. The length of the shadows show how much the price has moved up and down with respect to a candlestick within a specific duration. Candlesticks can also be colored. Red candlesticks indicate that the stock closed lower than the opening price. This indicates that the sellers were in control of the stock price. Green candlesticks indicate that the stock closed higher than the opening price. This indicates that the buyers were in control of the stock price. Red candles mean sellers are in control. Green candles means buyers are in control. Candlesticks can be viewed much like a game of tug of war, with buyers on one end and sellers on the opposite end. Sometimes in the game of tug of war, both sides are equally strong and there's very little movement. In candlestick terms, this is known as a doji, and it looks like a plus sign or a cross. When doji patterns are formed, it simply means that the buyers and sellers have come to an agreement on the price of the stock for that time period. No one is in charge. Candlestick patterns. There are numerous patterns of candlesticks. Each pattern gives you a prediction of the stock price movement. There are several books that have been written about the different combination patterns of candlesticks and what they mean. In this course, we simply give you a basic understanding of what a candlestick is and what it means. If you want to learn more about candlesticks, a great book to read is the Candlestick Course by Steve Nyson. Simple moving average. Stock prices move daily. Simple moving averages calculate the price of a stock over a selected period of time. Popular periods of times are 20 days, 50 days, and 200-day simple moving averages. When all three simple moving averages are laid out, certain predictions and trading signals can be made based on the simple moving averages crossing over each other. A moving average with a short time frame will react much quicker to price changes than a moving average with a long look-back period. 20-day moving averages more closely track the actual price better for a trader. 100-day moving averages is more beneficial to a long-term trader. Now let's talk about simple moving averages crossovers. Allen Iverson isn't the only one with a mean crossover. When two simple moving averages cross over each other, a signal is generated that the trend is about to potentially change. Let's look at the golden cross. When two moving averages are applied and the shorter term moving averages crosses above the longer term moving average, this signals a buy as the trend is shifting up. The death cross. When the shorter term moving average crosses below the longer term moving average, this signals a sell as the trend is shifting down. Bollinger Bands. Finally, one of my favorite technical analysis tools is the Bollinger Bands. They provide a very easy way to determine buy and sell moments. Bollinger Bands is a technical analysis tool defined by a set of trend lines plotting two standard deviations, one positive and another negative, away from a simple moving average of a stock's price. This tool generates oversold and overbought signals. In the next video, we'll show you how to set up Bollinger Bands. Congratulations, you've successfully completed week 4, technical analysis.